All right, good morning, everybody. Today's date is Tuesday, March 19, 2024. And remember, tonight at 8 p.m. Eastern, I'll be hosting a webinar tonight. It's in our free room. It's open to the public. And we're going to be talking about trend and price, whether it's bullish or bearish. So I hope everybody can join in, okay? Let's get started here. Let's start with the IWM since it's right up here. So what is this magenta color, I guess? This magenta color candle, this is pre-market today, this morning, right now. And we're just about at the 50 period moving average. And the importance of the 50 period moving average is there's a couple moving averages. The 50, the 200, and the 20 simple are probably the most three popular moving averages there are on anybody's chart. If you were to group everybody in the world together, they may not have all of those, but those will be the most popular. And what will happen is those moving averages tend to give a bounce, or they tend to give some kind of reaction. And whether the reaction is, let me get my arrows, the reaction could have been, let's say right here, we went below the 50 and back up. The reaction could have been down like this. And in fact, this is what we would call a blue ice failure here. So we could, come in here and get that reaction that might put everybody in a little bit of a bullish mood, but be careful, we need a chart pattern formed in here before we have any real turnaround. And then if we pull back, then we'll look for the reaction, because when we go below it or go above it, depending on who's got the ball, who's got the strength, they're going to try to get it the other way, like a game of tug of war. And then we move up, you could see that reaction to the downside. So the 50 period moving average does lend to some reaction. Good Son is asking, does the RBB work in reverse, such as IWM chart? Well, IWM is, let me make sure I get this right. You're asking about the RBB, does it work in reverse, just like we're looking at the IWM? And yes, it does. And that is one of the reasons the RBB chart works so well, is it uses the power of the 50 period moving average and the power of the 200 period moving average to draw price into those to get that reaction. So yes, it does. So what I want to be watching today is, are we going to crash through, or basically close below the 50 period moving average, or close above the 50 period moving average? And we also want to watch what this candle looks like, because if this candle looks like this, then even if we close above, we're going to have to evaluate that, which I won't think very positive of it. On the other hand, if we close, green, so we come down and touch it maybe, then close back up, I'll have a favorable look on this. And then just below, I'll have an absolute negative outlook on IWM, anything below the 50 period moving average. The Qs, we could be headed to that 50 right now. Once we get a trend going, the trend will stay a trend till it's no longer a trend. You can see how we've put in the high here and see how we're making lower highs to the downside. Here we're getting that reaction, trying to get the bulls back up, but they can't do it. The sellers take control, and they may just walk us right down till we get to that 50 period moving average, which we'll reevaluate at that level right in here. The SPY is trying its darndest to hang on to everything. It really is. It doesn't change the fact we have this top up here. It doesn't change the fact that let me put a little line in here. Doesn't change the fact we actually have a high and a lower high. Doesn't change that. The positive is we are holding on to the trend indicator. I'm happy about that. You can see the wedge. Just take this blue line up here. You can take this red line, and you can draw it from this low over here if you want. And you can see the wedge that's being made in here. So when we have a wedge like this and it's getting pretty tight, what we need is confirmation either to the bullish side or confirmation to the bearish side, to the downside. Inside this area is just a lot of noise and really way choppy maybe to be trading. So be watching for this, either a breakdown or a breakout. There is plenty room to move another day to the right on the SPY. There is plenty room there. Okay, I had an email last night. Somebody asked if we could focus a little bit more on shorts this morning, and that's what we're going to do. So let's. There's a couple longs in there, but we are going to focus on the short side of things. Here's Western Alliance, and Western Alliance. Here we've had this. We talked about this blue ice failure. Here we are down. There's your blue ice failure here. We broke below. We got that reaction. Now the reaction is to quickly swim back above, try to reclaim that 50-period moving average, but just couldn't do it. And then we've got this big bullish engulf in here. Let's reclaim that 50-period moving average. The 50-period moving average by a lot of traders is looked upon as above it, you're still for the most part bullish, or below it, you're bearish. And then another way that's looked at by many, many traders is the direction of the 50-period moving average. So see how this is pointing down? That is more bearish, way more bearish than bullish. This would be what a bullish look looks like right here. So anyway, Western Alliance here. Here we've popped down. We're underneath the trend indicator. The trend indicator is red. T-line's below the trend indicator. And we've got ourselves a nice little pop out of the box setting up right in here. Notice we have the dotted deuce right here and the 200-period moving average right here. So these are great moving average targets that we might take a look at. So right now, 57 is where price is sitting. Target of about 53, high 53s, and then low 51 down here at the 200. Here's a long, actually. If you're watching gold, NEM is setting up pretty nice. Here we've popped up. We've tested that 50-period moving average, and now we're just consolidating. You see how we couldn't get through it, and then all of a sudden we got through it. So that's a win for the bulls. And now we're holding up. As we hold up, the T-line will cross up over the 50. What I would like is the green dots here, or the trend indicator, to move over the 50-period moving average, and this will be a rounded bottom breakout when that happens. One could call it a rounded bottom breakout now. It's not official, but hey, let's not shoot anybody over it, okay? That could turn out to be a very nice chart. And then right up here is the 200-period moving average, and that's about 12-13% away. So that could be a decent little trade. How about those regional banks? Here's another one where we've got the, you get this top in here. We crash below the 50-period moving average. We attempt to get back up and can't do it. Here we pull down again and we try to get back up, just can't do it. And now we're pulling down again. There's the 200-period moving average right there. The likelihood of that getting tagged, I think, is pretty darn good. Trading is about probabilities. Put the probabilities in your favor, you're more likely to have a successful trade. This is what I would call a probability trade. We're so close to the 200-period moving average that the magnet force of that 200 just might get us down there. So probability-wise, I think it's pretty good. We're only looking at 2 to 3%, but hey, 2 to 3%, that's a start. If we fail the 50-period moving, the 200, you can see there's plenty room for KRE to move down lower. If you're watching the physical gold, this might be setting up to the long side. Here we've rallied up, we've pulled right back to the T-line. So what I'm going to want to do is just put a line in there like that. Anything above that 1670 becomes a trade. What I would like to see is probably trading above 1685. And what that would do, you hear traders all the time say, XYZ chart has triggered for a long. That is the price it would trigger for a long for me, is about 1685. So we would be looking at a candle. Let's say it does it today, it would be something like that. And that would trigger the long trade for me. GM, I guess I had a couple more longs in here than I thought. GM is still setting up. We've turned from red to green. Notice the direction of the 50-period moving average. So we've got a green trend indicator now. The T-line is over the trend indicator. You've got a great candle pattern, price action candle pattern right here. Fig Newton, I still love that. And we talked about this yesterday, maybe. Yeah, yesterday, maybe. I love that candle pattern. That to me, that is extremely bullish. Again, that's a probability. So we're going to put this, on a high probability list. It doesn't mean it has to work out. The market could tank, which would take everything down with it, more than likely. So here we are with this Fig Newton chart pattern. 2 days of consolidation over here. What we need to see is bullish activity above that candle. And I think that would put us right on target for a trade. So let's do that. Let's put that line right in there. So above 40.60, that would be considered for me a trigger, a buy trigger on this. And then you can see the price pattern. We would have these lows, we would have this high, we would have a higher low, and now we would have a higher high. And that is trading 101. That's set up right there. Just trading 101. Sometimes we don't like that, which I do, but some traders don't, because some traders want to catch it down low. That puts your probabilities, that really knocks your probabilities down when you try to trade in the basement, in the dumpster down here. It really does help your probabilities for a trade to work out when you're trading with the momentum of the charts. Okay, Intel, short. Look how Intel, blue eyes failure. This is still considered a blue eyes failure, by the way. We failed the 50. We're still trending down. Trend indicator's red. T-line's below the trend indicator. Price is below the T-line, right? Market is not exactly bullish. So what I just did was put the probabilities in our favor. So right now, let's target-wise, this is our dotted deuce right there for a target. There's the 200 period moving average for a target. And there is the 500 period moving average for a target. So Intel may be set up. I can't say whether it's going to make it down here, this 35 area, but the dotted deuce looks like a high probability trade. Underneath that, the 200 looks like a good probability trade. Notice the direction of the 50 period moving average. Everything's pointing south right now. Shop might be setting up for a short. Here we are. Let's do this. Here we are. We came down. Bulls tried to reclaim that 50 and get it, get something going above it, but the bears were too strong, knocked it down. They couldn't reclaim the 50 anywhere along the way, although they tried. Now here we are moving down. And if you're looking at moving averages, there's the dotted deuce, there's the 200 period moving average right there. If you're looking at price action, you're going to put a line right here at price action. There's nothing wrong with looking at both. When you're setting up a chart, there is nothing wrong at all saying, look, I'm going to be short shop. Possible target down here at, say, 72.90. Whoops, that was the wrong one. And then let's put the dotted deuce in there. Or you can go to this low right in here. Let's put another one in. So these are possible targets to the downside. And then you put your stop loss in here, which I think my stop loss more than likely would be about that 50-period moving average. However, if all of a sudden shop did something like this, I wouldn't pay attention to my stop. I would be out of that cold, because that could be a nice turnaround. I mean, let's just take a look at the chart pattern. Low, high, higher low. We actually did make a higher high, higher low. Are we headed for the higher high? So when you're looking at a chart, make sure you look at all sides of the chart. D-Dog, I almost shorted this last night. I don't think the short went through. I almost shorted this last night, but I ran into a problem of typing in the wrong signal. I had the wrong ticker signal loaded in there, and it was just a nightmare for me to get out of it. But anyway, it's still looking like a short below the 50, below the trend indicator, below the T-line, first target, dotted deuce. Shoe is the last one I have here, setting up for a short. And here we've got that blue ice failure setting up again. There's the dotted deuce right here. There's the 200 period, and there's the 500 period moving average right in there. Let's see. Richard says a wall, W-A-L, instead of a pop out of the box could be, you're right, a drop out of the box. Yeah. Drop out right there. And then Good Son is saying, I would wait till after Jerome before I traded gold. Yeah, and you know, the truth of it is, it might be wise just to wait till after that to trade anything. For some traders, not all traders, you've got to decide where you are. In other words, if you've been making money, then trade. If you've been struggling, don't. It's really simple, because there's nothing about today and tomorrow that's going to help you if you are a struggling trader. So it might be best to sit on the sidelines. Ask questions in the trading room. All right, my time is up here, everybody. Remember, tonight at 8 p.m. Eastern, okay? If you're not doing anything, love to see you at the webinar. Outside of that, I'll see everybody in about 25 minutes when the market opens up, okay? Take care. We'll see you shortly.